What's up, everyone? Welcome back to my solo podcast on property investing in Dubai specifically. And today I have a very interesting topic again on property investing in Dubai. So if you're interested to learn more about this and specifically which are the hottest opportunities right now, and by the way, I'm not talking about specific areas and so on. I'll just explain you in a second what I mean by that. Then stay tuned. Like this video, comment anything below, and subscribe to see more of this content on my channel. Today, I want to speak about the biggest opportunities right now in Dubai for property investing, specifically if you're looking for cash flow. And by that, I mean not necessarily the areas and, I don't know, some projects or master plans or master communities that you may think of. I'm actually mostly targeting investors who understand how you can get more cash flow out of your deals. And that's why I'm actually going to look more at the specific developers that I personally think are better for cash flow investments. And some of this, two of the giants that most of the people speak about is Damak and Emaar. And many people prefer Emaar, and most of you know by now, hopefully, that, all the projects that are released by Emaar are being sold in a few seconds or minutes and whatsoever, which is kind of true. And that doesn't mean that it's bad or it's good, because there are two sides of the story when you look at this. So first of all, Emaar projects are very high quality, and those are mainly for living. So in my opinion, I prefer looking at Emaar when I personally look for rent and I want a nicer building with really great amenities, with very good, sounds, isolation, and basically materials as well. And also very, very nice, slick design, minimalistic, and it just goes with many, many people. So that's one side of the story, and that's why also the prices of the Emaar buildings are a bit higher than the other ones. At the other hand, basically, Emaar also doesn't really get into the highest, league of rents that you can charge there. So as an investor, I wouldn't say that you would expect a very high cash flow from those investments, because basically the buildings are already priced at the beginning, I would say a fair price, but then they would grow in value, and the prices would actually only justify if your rent will go above the market price. So for example, if the apartment, let's say in Dubai Hills, is priced at 1.8 million, when the rent there is only 80,000 per year, isn't it better to look at other opportunities where the price of an apartment is, let's say, 1 million, but the rent is also 80,000? That's exactly what I mean by this. So if you're a smart investor and you want to have a higher percentage cash flow, then those Emaar projects, majority of them, they would actually never give you more than 10% if you buy them on the secondary market. If you buy them on the first, off-plan time of the sales, then probably you will make some good returns on this. I would say those are mostly the projects that you want to have a good capital appreciation, and you want to sell it after you bought it as an off-plan to an end user who will actually live there, and you will just make your money on that capital appreciation. On the other side, for example, why I personally prefer the Damak buildings as an investor is because the Damak buildings are usually priced pretty low, especially at the off-plan phase. So if you get into them at the right time, then when they are being built, the rent is actually not so big of a difference from the Emaar building. So for example, if a one bedroom in Business Bay in the Emaar building will be 100,000 to 120,000 dirhams, then in a Damak building, it's going to be just a slight difference of maybe 20,000, 30,000 dirhams, and it's going to be priced at around 90,000, for example. So you see the price difference is not really high, and that's why the actual ROI on those DMARC buildings is way, way higher than the MR buildings. Because if you invested at the right time with the MAC, and let's say you bought a one bedroom for 800,000 dirhams, and now you're renting that unit for 90,000, you're already making more than 10% ROI. And that's exactly why I wanted to address this topic in this video and tell you that it doesn't really matter as much for you as an investor looking at the specific area. It mostly is important for you to check what is the actual price at that stage when you're buying in that specific location, and compare it also with that specific location for the rents. Basically, try to understand what's the rent in that region, area, whatever, and in similar buildings, so that you can expect a percentage out of your investment and something that would work out for you. That's why currently, as a smart investor, the opportunities that you may see on the market, even from such really reputable developers as Emar or Miraz, they might be very appealing, but they might not be the right investment for you as an investor. If you're buying for yourself or you just want to have capital appreciation, then that's one side of the story. However, if you're looking for cash flow, then just need to reconsider how much you actually pay for those projects and how much you're going to make out of it. Also, some of these developers are building master communities. That's why if you're looking, for example, into Dubai South, then you see that MR definitely has great potential there. However, you might wait a long time until those all projects are finished, until the community is already bustling and like people are moving there, and you're actually being able to capitalize on that higher rent, because now I don't think many people would be moving there. And that's exactly why I would say check what's going on in that specific region and don't really get dragged into those deals that, you know, are looking like they could be very, very beneficial, specifically if you're looking for cash flow. If you are a very, very long-term investor and you want to just get into a great deal with a great developer, wait for those years until the building is completed and you can capitalize on that appreciation or higher rent, then that's one thing. So I definitely don't stop you from doing that. But however, in this video today, I wanted to target more the people who want cash flow, and that's why I personally think you need to analyze the market in more details nowadays and look at specific developers, what is the price that they are building those projects, and what is the price after the project is completed. Try to see where is the highest appreciation in the rents that they are generating, and then compare each project with each other. And then you will finally understand where the percentage in the rental generated is higher, and that's exactly the project that you should go for. As a hint, I would say try to look into those areas that are already kind of built and you already have those good factors that determine your higher rent and the probability that you're going to rent it quicker. Because basically, just going back to the point that I just raised a few seconds ago, if the master community or just the area is already built, then you obviously will have more demand, and that will just make your life easier. So that's why I would say just go for those areas that doesn't matter which area. I mean, it could be Marina, it could be downtown, it could be Business Bay, but it also could be the other areas that many don't talk about, like Arjan or Dubai Land and many other as well, Sports City, Motor City. So there are plenty of areas. It just doesn't matter on the area specifically for you as an investor. It matters on the numbers. So just go dig in, do your research, and try to analyze which of these, also based on your budget. Maybe you want to buy something under 600,000 dirhams, which is not possible in Business Bay or downtown, but is actually possible in other more remote areas, which don't necessarily mean that they would bring you lower rental returns. Because, for example, even in Dubai Land, you can have 12 to 15% returns, and that's on long-term rents. If you want to do Airbnb, that's way higher. So definitely check into that. and see whichever is working best for you and for your budget. And with that, I hope you enjoyed this video. I hope you will use these hints. And if you do, please get back to the video, comment below, and I will see you in the next one.